Good morning. I'm Dr. Wilson Pearl, Associate Professor, Department of Corporate Secretaryship of KCS Kasnada College of Arts and Science. Now, let us see few sums, at least the two sum from the average profit method in the chapter Goodwill. Okay, let us take this sum as an example now. Following details are available about the business of Saga Limited. Profit of 1994 is 80,000 given as 95 is 1 lakh and 96 is 1 lakh 20,000. Non-recurring income of 8,000 is included in the profit for the year 1995. So which means in the year 1995 there is unexpected income is over there. 8,000 that is included in the year 1995 which is 1 lakh. Okay. Now profit of 1994 have been reduced by 12,000 because of the goods were destroyed by fire. So the profit of the 1994 is given as 80,000. This is after the reduction of goods destroyed in fire. The amount is 12,000. Then goods have not been insured, but it is thought prudent to insure them in the future, which means it is an expenditure which is to be increased or which is to be shown in the future from hereafter onwards. So that expenditure is not recorded in the above profits 94, 95, 96. So that also should be given in corporate. That also given effect for this. Then the insurance company estimated amount is 800 per annum. This 800 per annum it should be given effect hereafter. Or for the past also. Reasonable remuneration of the proprietor of the business is 12,000 per annum, but it has not been taken into account for calculating the above mentioned profit. Even this is also not included in the above mentioned profit. The problem says. Then the last one, the profit of 1996 includes 10,000 income on investment, which means in 1996 the profit shown as 1,20,000. That includes an income which is not expected to be the business income. So that is amounts to rupees 10,000. So that should be eliminated. Okay. So these are the logics. Okay. Now let us see the answer in the next slide. Okay. Now see the profit of 1994 is shown as 80,000 as you saw in the sum. That is added. That is the stock destroyed in fire has been added. Because of that it is added. Okay. Then we already saw the profit. The average profit is equal to add non-recurring expenses minus non-recurring income. So these are the expenses that we have given in the example in the formula slide. Okay, formula video in other words. Then for the year 1995 it is 1 lakh. So this includes non-recurring income. So all your non-recurring, all your unexpected income will be eliminated. Unexpected loss will be added to the particular year profit. Okay. Now therefore stock destroyed in fire 12,000 is added. Then non-recurring income as 8,000 is deducted. Then profit of 1986 is included. Income for investments 10,000 also. All your unexpected income will be eliminated. All your unexpected loss will be added. That is the logic. Okay. So that is what is done here. So the after deduction or addition, the net profit is shown in the outer column. 92,000. Then again 92,000. Then total 1,10,000 the third year. The total is 294. For average you will get by divided by 3. It is 3 years profit. Therefore you divide by 3. The average you will get is 98,000. Okay. The average that you get is 98,000. Now from this average profit, the future expenditure, which is not shown or which is to be shown in the future, which is not adjusted in the profit given above, all those expenses will be eliminated now. So after the average, you will minus the insurance premium, then proprietor remuneration, which is not shown in the above profits. The both together will be 12,800. So 98,000 minus 12,800 will give you 85,200. That is your average maintainable profit in the future. Okay. The average profit for last 3 years maintainable profit is for the future it is 85,200. Therefore goodwill formula will be average maintainable profit into number of year of purchase. Therefore 85,200 into 3, which will give you 2,55,600. That is the goodwill amount is 2,55,600. So these are the sum ends. Now let us go to the next sum. The next slide. Now let us go through the sum and make it what is the difference. What are the important points to be noted first? Vatsal, who has been carrying on a retail business for the past 20 years, intended selling his business in 31st December 1998. It is agreed between Vatsal and the buyer that the latter pays 1,50,000 for goodwill. So which means they have already predetermined the goodwill to be 1,50,000. So it's our duty to find out and tell what is the real value of goodwill. From the following particulars applied by Vatsal, calculate the value of goodwill if it is based on the 4 years purchase of average profit of the last 5 years, including the profit of 1998. Then first year, we'll see 1994 is 30,000, 95 is 40, 96 is 46, Then 97 is 55. Okay. At the time of acquiring Vatsal business, the buyer was employed as a manager in a similar business on a salary of 1000 per month. So it is per month 1000 means for the year it will be 12,000. So keep that in mind. Then profit of 1998 included above included the profit of 1998 includes the income from investments, that is 3,500, and the profit of 1995 had been reduced of 4,000 loss on speculation. Similarly, the profit of 1997 had been reduced by 6,000 owing to loss on betting. So these are the effects should be given now. Okay. So now let us see. This is an example. Then so here, that is the next slide. See, it is shown here for the year 1984. The profit is 30,000. Now there is no change in your, there is no effect, there is no additional subtraction to be made in 1984. But 95, there is a speculation loss. We saw in the sum now, just now. There is a speculation loss to be added. The 1996 also there is no change. There is no any loss or any gain that is there. Not related to business is not there. Therefore, 1996 is shown under directly to the outer column. Then 1997, 55,000, out of which there is a, that particular there is a loss due to betting. So any loss or expenditure will be added, which is not related to business, will be added again. So 55,000 plus 6,000 is 61,000. Then income, 1998 is included income from investment of 3,000. Out of 44,000, 3,500 is eliminated now. Therefore, the real total profit is 2,21,500 for the last 5 years. Therefore, the average profit will be 44,300. Then there is a proprietary remuneration, I told you, know, it is 1,000 per month. We have to multiply by 12. So 44,300 minus 12,000 will be 32,300. Then the formula, the problem says it is 4 years purchase. So 32,300 into 4 will give you 129,200. That is the value of goodwill. Okay. The proprietary remuneration is nothing but because the buyer has been working in a place where he is getting 1,000 rupees as salary. So we assume the same is maintainable in the future as well for him, even in this particular business. So if he's going to take down this business and another business, he have to leave the other job which he has already been carrying out at 1,000 rupees per month. So which means he assumes to get same salary. He is expecting to get the same salary here in his own business, at least 1,000 per month. Therefore, we are deducting as a future expenditure. That is 12,000 is gone. Okay, is it clear? So thank you. We'll see the next method, that is super profit method, in the next video. Thank you.